Hello, well builders. Hello, friends. Good morning, good afternoon, good evening, anywhere you are in the world. Welcome back to my channel. This is Adeyemi Samuel, your wealth instructor. I'm super excited to have you today, and thank you for joining me again. For those who are joining us for the first time, this is Well Builders Academy, where we dish out very educative financial and investment content. It's more like a class, it's more like a lecture, and it's more like digital consultancy. Do well to subscribe, share, and like our content. So without further ado, let's go ahead and dive into the lecture. Okay guys, so today we are talking about the two categories of investments you must have to build wealth in 2025. Yes, there are two major categories of investments you must have in your portfolio to actually build wealth, to actually create and multiply wealth in this year 2025. And definitely anytime you're watching, if it is not 2025. So yeah, this lecture will still be relevant definitely by that time. So in our last lecture, we talked about how to choose the right investment in 2025. I showed you this this investment risk meter, which helps you identify various category of investments and the associated risk with them. So we can see the green area talking about low risk, and then talking about the red areas which has high risk. So just like I've said before, every investment carries risk, just that the risk of one is lower or higher to the other, but every investment has a risk. So in this lecture today, the two categories of investment you must have. Number one is the high risk and high yield, based on category. High risk and high yield investments. Yes, I'm bringing in this as number one because of people who do not want to take risk at all. I know a lot of people do not just want to hear that word high risk or high yield, but the truth is, if you must build wealth, if you must create wealth, multiply wealth, you must have a high risk and high yield investment, an investment that can accelerate your wealth building process. You must have it. And you remember in the last lecture I mentioned to you that the way you do this, the way you balance your portfolio is diversify. So don't put all your eggs in one basket. Don't put all your money in high risk investments, and don't put all your money in low risk investment. You have to balance it. So you must have, number one, high risk and high yield investments, and number two, you must have low risk and low yield investments. Okay, so that's where we're going today, and this is the explanation on the first category, high risk and high yield investment. Hold on guys, before we continue, if you have not subscribed, please subscribe, and again, watch till the end. There is a bonus for you. The bonus is going to put money inside your pocket, trust me. So guys, let's move ahead. All right, so this first category have high potential for losses if not done right. Note that word. And your return on investments in this category is not fixed, not guaranteed, unlike the other category. So here there's high potential for loss, that's why it's called high risk. And also there is high potential likewise for the yield, the return on investments. If you do it right, you get it right, you are going to have hundreds in the rate of return, in the percentage of your return on your investment. You're going to have 100%, 200% within a particular period of time, within a considerably reasonable period of time. When you are dealing with high risk and high yield investment, you need a considerable period of time to allow it to run. You need to be patient with it, and it is not something that you do that you are expecting quick returns immediately. No, this falls under the category of maybe medium and long-term investments, but by the time it's going to give you your returns, it's going to be multiple folds. That's the beauty and the benefit there. So it helps to accelerate the process of building your wealth. So when I'm talking about high risk and high yield investments, please note, I'm not talking about CBEX kind of investment. I'm not talking about investment that are not regulated by the authority, or investment that are Ponzi schemes and get rich quick schemes. No, that's not what I'm talking about. In this category, I'm talking about stocks, company stocks. We're talking about forex trading and investment. We're talking about crypto. We're talking about venture capital. For those who don't know, that venture capital, it involves sponsoring new business projects, business idea of new entrepreneurs, new businesses, and then partnering with them on a sharing ratio when the business is making profit. So that is venture capital and such like. That's what I'm talking about in this category. And I know a lot of people don't want to hear crypto or what's it called, forex trading, stocks, all these, they are all in the same category. But know the word, the key word there is if done right. So this category requires a high level of professionalism and a high level of technical knowledge of these investment schemes before you can thrive in them. Another way people get to maximize the benefits in this investment category is engaging professionals. Okay, still under this high risk and high yield investments, one thing people don't actually know is, especially when it comes to stocks and some of these assets under high risk, it is not actually true sometimes that you can just lose all your funds like that. It is not actually true that you can just lose all your funds like that, especially with stocks, for example. Okay, let's take for example you bought some shares and there was market crash and the price went down and all that. The only thing that's going to affect you is you might have to wait for a long time before you recover. It's very rare for you to, if you do it right, again, because before you invest in stocks, you put your money in companies, blue chip companies, not companies that are not really standing well on their 2 feet. You putting money in blue chip companies, companies that are thriving, and with projections that in years to come the value the company is offering to the public will still be required in years and years to come. Look at Dangote, look at telecoms, look at Nestle. All these companies, they are providing essential services to the public, so their services will continuously be required by the public for years and years to come. Whether you like it or not, people will keep building houses, people will keep buying foods from Nestle, people will keep making calls using data, MTN, Airtel. So these are essential areas where you look at when you want to invest in stocks. So worst comes to worst, for some period their stocks goes down, poor performance, it only affects those who are trying to make quick money in the market for a particular period of time. So and if you're in that category, what will only happen to you is to shift your goal. You have to readjust your goal based on the market condition and then push your goal to long term. In 2007 or 2008, when there was a drastic market crash, all the stocks went down. Now they are all back times 3, times 4, times 5, like that. So look at it. So you eventually get your money back. It's just that it might affect your financial plans and your financial goals. So that's it about stocks and high risk and high yield investments. So moving on, guys, to the next category is low risk and low yield investments. This is just outright opposite of high risk and high yield investment. As the name implies, it has a low risk, is little to no risk investment, and then the yield, the return on investment is also low compared to high risk and high yield investment. So this category have low potential for losses, and then the ROI is mostly fixed. Sometimes right now we have 18, 20, 24% thereabouts, depending on which asset class you are investing in. And assets in this category include treasury bills, treasury certificate, government bonds. You really can't lose with all this. So, and sometimes we can also categorize commercial paper. Yeah, commercial paper is just like opposite of government bonds. Government bonds is lending to the government. Commercial paper is lending to blue chip and blue chip companies, well-established private corporations. So this category helps those who are risk averse, those who don't want to lose their money, gives them rest of mind. They have assurance of getting their capital and getting their ROI as at when due. So it is wise to diversify in both high risk and high yield, and also low risk and low yield. So certain percentage of your investments capital should go to both, to balance the equation. So for beginners, this category, low risk and low yield investments categories, are actually where you need to begin your investment journey. So guys, like I said in the beginning or in the middle of the video, I have a bonus for you guys. So but before I give you the bonus, let's come to a conclusion. Which of this investment category do you already have, or which one would you like to start with? Let me know in the comment section. So on a final note, guys, I've said it over and over again that both high risk, high yield investments and low risk and low yield investments are both important in a portfolio. It helps you to balance your risk. And then for the high risk and high yield investments, see guys, this is non-negotiable. Look at the wealthy people around the world. Where do they actually make the most of their money? It's from the high risk and high yield investment category. Look at Warren Buffett, a highly renowned investor, makes most of his money from this sector. He was once richest man in the world. Look at Femi Otedola in Nigeria here. From one company to the other, that's how he keeps multiplying his money in billions. Right now, I think he's the chairman of FBN Holdings. So if you're still thinking high risk investment is not the way to go, think again. All right, so I want to say thank you for staying tuned. And the bonus I have for you guys is for many who want to stay in the middle. They don't want to lose their money and they don't want to wait for too long before they get their gratification, before they get their return on investment. There is a package for you, and trust me, this is what I've done and this is what I'm doing that is making me consistently from 10 to 40% on a quarterly basis. This is absolutely real. I've posted it, I've said it. Many people are not taking advantage. Well, it's left to you, but I'm not going to share the link on YouTube here. You'll have to go to the Wealth Builders Academy Telegram handle. That is at Build My Wealth. Search in Telegram, you'll see the channel. Join, and then you'll get to see the link. It's actually I've done a video on it. It's a way where you save your money at the same time invest. It's a smart way of banking. So this is dealing with the investment banks and taking advantage of them, using them to turn around your funds, and you get 10, 20, 30, 40% return on investment on a quarterly basis. It's called a quarterly dividend because it's a mutual fund. So mutual fund is another beautiful investment opportunity. I'll get to do a concise and direct video on that shortly. So take advantage of it. It's really very impressive. It's impressive. So the link will be in my Telegram channel at Build My Wealth. Look for it. And for instance, or peradventure you need investment consulting service, we are there for you. DM on Telegram at realty_cv. The email is also there, realtyinvest.cv@gmail.com. This is your humble wealth instructor, a chartered finance administrator, and an investment consultant, saying thank you for watching, thank you for liking, thank you for commenting, thank you for subscribing. God bless you.